PayPal is by far one of the most functional apps in the world. We use it to pay rent, private teachers, contractors, freelancers, friends, family, and even certain purchases. PayPal made sending and receiving money through the internet more straightforward than ever before. All you needed was someone's email address. You didn't need to deal with bank accounts or routing numbers or any of that. Just make sure you typed in their email correctly and hit send. Ironically, this is not what PayPal was actually created for. The founders envisioned that PayPal would be an internet-based financial management system, and sending money using email addresses was just a side feature. Yet, it quickly became the main feature. We can't forget about Venmo either, who PayPal acquired back in 2013. In the US, Venmo is so popular for splitting bills that it has become a verb like Google. Considering the popularity and functionality of PayPal, I don't think you'd be surprised here that PayPal boasts a market cap of $100 billion. And that's with the 75% sell-off. But what is surprising though is that people aren't exactly fans of PayPal. In fact, PayPal has quite a negative reputation. Several months ago, I posted a video about the downfall of PayPal stock, and most of the comments were actually happy that PayPal was getting destroyed. PayPal is old tech and it's total garbage. I hope this company goes bankrupt. Good, I hate that company. PayPal is a terrible company that I only deal with when I have to. Glad there are other options now. It's not just my YouTube comments that were so critical of PayPal either. After a little digging, I quickly realized that people don't just have qualms with PayPal, they actually utterly despise the company. Take Trustpilot for example. PayPal has a solid 23,000 reviews on Trustpilot, but 87% of those reviews are literally 1 star, and only a mere 8% are 5-star. So how did such a useful and seemingly neutral company earn such a terrible reputation? One of the most common use cases of PayPal is to pay third-party sellers that you don't fully trust. If the seller does try to pull a quick one, you would hope that PayPal would side with the customer and help facilitate a refund. But according to the vast majority of online anecdotes, PayPal never sides with the customer, even when there are several red flags and a bunch of evidence. Take Red Hat 27's experience for example. Red Hat tried to buy one of these Y security cameras from a third-party seller using PayPal. But as you would guess, Red Hat would never receive his camera, so he would file a claim with PayPal and do some digging on his own. First, he tried calling the seller's phone number, and the person that picked up was some tow truck driver. Apparently, the tow truck driver was receiving over 300 calls every day from people who had fallen for this scam, and he had already reported it to the police and the Better Business Bureau. You would think that this information alone was enough for PayPal to side with Red Hat, but Red Hat had even more evidence. He went ahead and called UPS, and UPS would confirm that the parcel wasn't even being shipped to his home address. What the scammer did do though was ship some sort of parcel to the same city and state. This way, when you track the package online where only the city and state are displayed, it looks like the package was delivered correctly. PayPal would take this as evidence that the package was indeed delivered and close the case against Red Hat. All PayPal had to do was call UPS about the shipment, and it would have been clear who was on the right side. But PayPal couldn't even do that. While the vast majority of complaints surrounding PayPal are buyer-related, it would be unfair to say that it's only the buyers that are getting scammed. The vast majority of PayPal customers are buyers, and that's why their stories dominate the internet. But there's plenty of seller horror stories as well. One of these stories comes from a man named Andy Dollinger who sells electronics online. One day, Andy received an inquiry from a customer regarding if he's willing to ship products to India. Andy had no problem shipping products internationally, but he was a bit concerned about the buyer's account. Apparently, the account was created within the last month and only had 2 positive feedbacks. Nonetheless, Andy decided to give the buyer the benefit of the doubt and shipped him a $1,500 iPhone 12 Pro Max. It took some time for the product to reach the scammer, but as soon as he received it, he filed a complaint that the box didn't contain the phone. Andy would reach out to DHL, who graciously provided CCTV footage that proved the weight of the box. Andy also contacted his supplier, who provided evidence that the box with the phone weighed the same amount. And Andy turned over both pieces of evidence to PayPal. At first, it seemed like PayPal actually sided with Andy, but 2 weeks later, Andy received an email letting him know that they had decided to side with the buyer. Since then, Andy has called the Indian police, the European Consumer Center, and sent over more evidence to PayPal. But none of this has gotten Andy his money back. As you can see, PayPal doesn't necessarily always side with the buyer or the seller per se, but it does seem like they usually side with the scammer. The reason for this is that the scammers are keenly aware of exactly how PayPal conducts their dispute investigations, and they precisely structure their frauds to fall through PayPal's gaps. For example, the first scammer knew to send the product to the same city and state, and the second scammer knew to use a new account without a bad track history. You would think that PayPal would be aware of these loopholes in their system, and maybe they are. But given the raw number of PayPal horror stories online, it doesn't seem like they've made any quantifiable change. With such terrible customer service, you would think that PayPal would at least charge lower fees, but this is not the case either. If you're a buyer or simply sending money to friends and family, you probably haven't noticed this because PayPal is free for you. But the same cannot be said about merchants. You see, whenever a customer uses PayPal for checkout, the merchant has to fork over 3.5% plus a fixed fee straight to PayPal. This might be viable for large retailers like Walmart and Target, but for small merchants, landlords, and private teachers, this fee is substantial. For example, let's say that you're trying to rent out your parents' old house for $1,200 per month. At 3.5%, $42 would go straight to PayPal every single month. Through the course of a year, that works out to over $500, and that's just for domestic transactions. If you're engaging with international customers and deal with some sort of currency exchange, you're gonna have to fork over a conversion fee to PayPal as well. By the time international merchants pay all the fees, they've often lost 5% of the transaction value. Even credit cards, who are known for having high fees, have lower fees than that. Visa and MasterCard, for example, charge 1.5% to 2.5%, and even American Express only charges 2.5% to 3.5%. Not to mention, all of these networks provide fraud protection and customer service that are leagues above PayPal. So, with PayPal, merchants are often forced to pay higher fees for a worse service that neither them nor their customers are happy with. One workaround for these fees is to just complete personal transaction instead of merchant transactions. However, this is not only against PayPal's terms of service, but most customers are hesitant to choose this option, especially when it comes to online transactions with unknown sellers. So, while most sellers would love to ditch PayPal, they can't because PayPal is often the standard and that's what many customers are used to. Fortunately, friendlier options like Zelle, which charge no fees, are starting to grow in popularity. But in the meantime, sellers can't do anything other than be frustrated with PayPal. While customers often cite a wide variety of complaints when it comes to PayPal, whether it be scammers, high fees, or frozen funds, it seems to me that the key reason for almost all of PayPal's issues is that they're not regulated like a traditional financial firm. On one side, they're kind of a bank, but they don't have to follow the same rules as Wells Fargo or Chase. On another side, they're also kind of a payment network, but they don't offer the same consumer protection services as American Express or Visa. Initially, this lack of regulatory oversight was thanks to PayPal's unique business model. They were one of the first to jump into this world of internet finance, so regulators simply didn't know how to regulate them. PayPal fell into this gray area similar to crypto brokerages today, and I think we all know how that turned out. Just take a look at Voyager or Celsius. PayPal hasn't been engaging in anything anywhere near as risky as those two, and that's why they haven't completely collapsed. But this isn't to say that PayPal services are making anyone especially happy. I mean, there is a reason that there are rules and regulations surrounding cash reserves, fraud protection, and fees that traditional banks must follow. Throughout the past 100 years, regulators have figured out that without these rules and regulations in place, it becomes increasingly likely that consumers are taken advantage of. Now, this isn't to say that PayPal does not follow any rules whatsoever. As regulators better understand the internet, they have been getting stricter when it comes to the activities of institutions like PayPal. For example, PayPal has to abide by the following government regulations: Payments Regulation, Banking Agency Supervision, Consumer Financial Protection Bureau, Anti-Money Laundering, and Interchange Fees. While this is definitely a step in the right direction, PayPal still doesn't deal with anywhere near as much oversight as traditional financial institutions. And I'm sure that PayPal's lawyers and lobbyists are being paid extremely well to make sure that that doesn't change. And honestly, you can't even blame them for that because any business owner would want the same. But that doesn't mean that this choice doesn't have consequences for their customers. In the end, while regulation may fix some of PayPal's shortfalls, regulation is rarely an ultimate solution. For PayPal to really turn things around and improve their reputation in the business, change has to come from within. One of the easiest places that they can invest in is their customer support. It seems that their dispute teams just want to close cases as fast as possible while following PayPal protocol, when their goal should be to uncover the truth and side with the correct party. I mean, this sounds like a no-brainer, but given all the stories online, this is obviously not what's taking place. In terms of fees, while their fees are high, I don't think PayPal has to reduce their fees per se. Usually, it's not high fees alone that trigger customers. What actually triggers customers is paying high fees for crappy services. There are so many businesses that charge high fees and offer a premium service, and their customers love them. I mean, one of these companies is literally the largest company in the world, Apple. So PayPal could definitely play this card as well. But as long as there's a gaping disparity between the cost of PayPal and the perceived value of their services, I doubt that PayPal's reputation will improve. But that's just what I think. Do you have a positive opinion on PayPal? Comment that down below. Also, drop a like if you hope that PayPal turns things around at least for the sake of their customers. And of course, consider checking out our Discord community to suggest future video ideas and consider subscribing to see more questions logically answered. Until then, I'm Hari, and I'll see you guys on the next one.